April of 2000. If there was a bubble, the bubble certainly came to an end. Was it a mass delusion? Was it the madness of crowds that occurred, where we actually thought that profitability didn't matter, that you give away everything you do for free, and that basically the laws of economic gravity don't apply?
Yeah, I think there's a lot of soul searching going on right now in lots of quarters about who's responsible for what happened. Is it the media's fault? Is it Wall Street's fault? Is it the VC's fault? Is it the entrepreneur's fault? Maybe it's human nature. Maybe there were a couple of companies that stumbled on this new technology that none of us understood, and we're fundamentally an optimistic group of people, and all looked at what we could do with the internet because everyone correctly understood that, frankly, very little would be the same. Very little in business life would be the same with this whole new method of communications. So maybe we got carried away and funded all kinds of businesses and only saw the glass as half full without recognizing that there was risk. But as to whose fault was it? A couple of companies, hit the market at the right place at the right time, and then everyone looked at those few companies and said, that can be me. No one should forget that when Amazon went public, there was great skepticism. Just, this will never work, selling stuff online. But then, partially as a function of supply and demand, partially because it was clearly a very, very smart management team, partially because there wasn't that much stock out there. After a bumpy beginning, the stock started to climb, and so everyone else thought, wait a minute, they built this new business, I can do it too. And it became a cycle of, well, I missed Amazon, so I'm sure going to invest in BarnesandNoble.com or Beyond.com or whatever the next one was. I think what happened was mostly a function of human nature. And the bubble did change, and it changed because, why? Because a lot of the business models weren't sustainable, and after a couple of years, suddenly the holes in the models became apparent. There was also too much supply. Obviously, we've heard sort of look at the huge number of lockups that came off. Look at the quality of some of the later stage companies that came out. Not quite the same. So I think a whole bunch of influences sort of came together at the same minute, and here we are. It had to happen eventually. Why it was April 13th? It was April 13th because every time I buy a house, the market crashes. But other than that...
So you're the cause.
I am. I take responsibility.
You talked about the fact that B2C, business-to-consumer businesses, like Amazon for that matter, are out of style right now. And we've certainly seen in the venture capital community, your new adoptive community, as well as on Wall Street, these extraordinary gales of fashion amongst otherwise left-brain-driven analytic people. From B2C to B2B to B2B hubs to God knows what else. What's going on?
Of course, the short answer is beats the hell out of me. But one of the things that changed with the internet was the involvement of the retail investor. And in fact, the level of conversation in the marketplace in general from individuals. Look at all the stock-based chat rooms. Look at, again, the huge volumes that the Schwab's Online and E-Trades are doing. So we have many more people commenting on the markets, which I think has actually served to, it's been very healthy, but it also has increased volatility. But we had so many stocks trading on momentum. Well, I bought this one and it went up, and you didn't buy it, better buy it today, it's going up tomorrow. And so we bid these stocks up way too high. Now we're, bringing them down way too low. It's kind of, amusing is a tough word to use given that people are losing a fair amount of money at the moment. But if you sit back and look at this from a sort of I'm not engaged in it perspective, it's absurd that we're saying we hate B2C companies, we love B2B. Oh wait, we hate B2B, now it's P2P. What happened to evaluating individual companies on their own merits? Since when do we lump everything together? That works with oil companies, perhaps, at some level when it's all based on the price of a commodity. But in this case, it's absurd that we're evaluating all of these companies together. But nonetheless, we are, and you're absolutely right. It's become fashion. We're sort of like the fashion industry. Oh, hemlines up, hemlines down, stock prices up, stock prices down. At the end of the day, the solid, well-run companies with real businesses and real business models and sustainable advantages will prove out. But what happens to the market in any given week? No telling.
What are some of the examples or illustrations of the best type of pitch or the best pitch that you've heard in your role as a VC, the worst pitch? And I ask that because you're now in exactly that role, saying, look, I'm going to ignore fashion, I'm going to ignore trend, I don't care whether B2C is in or out, that's what I want to work with. There will be good businesses there, I'm going to find them.
Yeah. Convince me that you are filling a need. Don't try to convince, don't try to, frankly, some of these businesses will work out just fine, but it's much harder to create a need than it is to fill an existing problem. So in very simple terms, tell me what problem you are solving. Then tell me why you're going to solve it better than anyone else. Because if it's a real problem, then there's a real opportunity, but there are a bunch of smart people out there. Somebody else will see it too. Why are you the one who's going to be able to capitalize on this? And then explain to me your business model. And again, that doesn't mean, I need to know what you think you're going to earn in 2007. It does mean I need to know that you know what it's going to cost you, or at least you've thought about the process of what it's going to cost you to get there, or how you're going to bring revenues in. The date of, we'll build a business and see what happens, those are sort of over. It is management, although at this stage, management is at some level less important than it is at the IPO stage. And I guess what I mean is, at the IPO stage, I want to make sure that it's an entire cohesive team working together. At the venture stage, I want to see an entrepreneur who is truly driven, not necessarily by the promise of great wealth, but has a passionate interest in whatever the business is. Because one of the things that a lot of entrepreneurs are learning right now is that there's some really rugged times. And if you don't fundamentally believe in the business, then you're going to have a hard time, and you're going to have a hard time keeping your staff. So I want to see that the people who are there now are really motivated about the business. And if there's a few holes in the management team, shoot, that's what we do. We can help fill that. We can help, find people from our collective Rolodexes. But those are the big issues. Is there a big need? Do you have a sustainable advantage? And are you absolutely passionate about what you're doing?
Does the renewed emphasis, not just your emphasis or the philosophy of your VC firm, but the renewed emphasis on shorter-term profitability goals, is that going to wipe out some of the creativity that has become a hallmark of the so-called new economy?
I suppose the real answer there is we'll see. I think in the beginning there was a lot of creativity in setting up these businesses, but as it suddenly looked like the free lunch, the pot of gold at the end of a very short little rainbow, I think a lot of the businesses that popped up weren't creative at all. They were simply, oh, Amazon did it in books, hey, we'll do it with, name your product here. So I think the real passionate, really creative entrepreneurs will still get funded, will still go after new businesses, and hopefully it won't stop it. What the new market environment should do is perhaps, slow the development of businesses that aren't really there. And having said that, there will be some rather odd businesses that are incredibly successful, and there will be some really well-designed, well-thought-out businesses that fail, because we should never underestimate the importance of luck in any of this.
Luck, execution, all those minor details.
All those minor details. Yes, execution is obviously critical, but there will be people who do everything right and still don't make it, because that's what being an entrepreneur is.